The whole story is coming together now, isn't it? It's starting to paint a picture. We remember the magazine cover from the Economist magazine, which is a magazine that's run by the Rothschilds. And we see that I'm looking at right now, tonight, I'm looking at the U.S. 10-year, and it's at 2.735. Halfway to 2.74. This thing is not going up slowly. This thing's going up fast. I think this has all been actually planned, because the trigger, now at this point I can see that the trigger is the bond market. And the Federal Reserve is what's pulling the trigger. They're selling their toxic balance book. And what they're doing is they're going to be increasing the effect every quarter that goes by. So it's basically like they're pulling the trigger. They know exactly what's going to happen. They know that bond yields are going to rise. And this in turn will pull the plug on all the bubbles. All the bubbles that they created through forced debt creation. Now, I'm trying to think of his name right now. I'm having a brain fart. Reverend Lindsey Williams. Reverend Lindsey Williams. I'm sorry, but the name just eluded me for a minute. Anyway, he said that they were going to use what's called forced debt creation. And forced debt creation is actually, debt is credit. Credit is debt. This forced debt creation was blowing up all of these bubbles that they were blowing up with a zero interest rate policy and near interest, ZIRP and NIRP, near zero interest rate policy and zero interest rate policies, NIRP and ZIRP. In Europe, they had the below zero interest rate policies. This whole thing's coming to an end. They blew up these bubbles, massive bubbles in the system. And now they're going to bust them with their own timing. This whole thing's becoming clear what they're up to. They're going to create a situation. And they're doing it on purpose. And I am going to say that most likely thing that's going to happen, it's not an absolute certainty, but the most likely thing that's going to happen is when these bubbles start to burst, we're going to get deflation. This is the most likely thing, and it's going to be profoundly bad deflation. This is going to give them the excuse to come in with new monetary policies to release the floodgates of money. See, the way it is right now, if these guys were to go out and just say arbitrarily, we're going to release the floodgates of money, everybody out there would just say, hell no. You know? They have to have a reason for doing so. A good, valid reason for doing so. This is going to give them their valid reason for doing so. The whole thing is a setup. They're selling their toxic balance book into weakness. They were cutting back quantitative easing into weakness. It's a no-brainer. What's going to happen if they continue to sell their toxic balance book of bonds and there's no buyers, that the yields are going to continue to climb. So, I mean, it's going fast. It was like, just like a week or 2 weeks ago, it was like 2.45. Now it's 2.73 tonight. It was just 2.72 or 2.71 yesterday. It's going fast. It's heading towards 3%. This is going to bring the system down. in a deflationary event. A very quick, profound, hard, strong deflationary event is going to hit suddenly. Nobody's going to be expecting it. Everybody's saying, oh, the stock market. This is going to reverse the flows of money. Right now, what do you got? Right now, you got the velocity of money that's nearly at a stop. What's going to happen is when this deflation comes, when the stock market falls, your velocity of money will stop completely. It'll come to a complete stop. And then what happens is then when the Fed comes out and they reverse this, they'll reverse all the flows of money and the velocity of money will go back up again. This whole thing is going to end horrible. It's going to be horrible. But not for people who own gold and silver. It's going to be massive. I can't begin to tell you how much this is going to enrich the people who have physical gold and silver in their possession. This is going to be absolutely incredible. I'll tell you how bad it's going to be. I'll try to give you an illustration. I could see the price of silver and gold, silver especially, is going to gain a lot, to where you're going to be able to buy real estate. Really isn't going to move that much up in price. If anything, it might actually fall in price a little bit from the price it is right now, but we're going into a hyperinflation. So if real estate prices stay the same or even fall just slightly, and we're going into a hyperinflation and the dollar is going to be worth almost nothing, your real estate is going to be worth, the value of it is going to be way down low on the floor after this thing is over. And so an ounce of silver is going to go up so valuable, you'd probably be able to buy 45 acres of land with an ounce of silver. It's the sort of thing we're talking about here. It's going to be ridiculous. For like one tube of silver coins, one tube of eagles, 20 eagles, you're probably going to be able to buy the house of your dreams. And so for these guys out there, right now that are jumping the gun, just wait a little bit. Wait a little bit. Hang on to your silver and your gold. That's where the real value is going to be, in your silver and your gold. And cryptocurrencies are going to go way up too. When the timing's right, after the deflationary event's over. This deflationary event is going to see cryptocurrencies destroyed practically. But it's not going to destroy gold and silver. Gold and silver is going to go up during the deflationary event. So is cash. But everything else is going to take an awful beating. Real estate is going to take a terrible beating. Cryptocurrency is going to take a terrible beating. Everything is going to take a terrible beating. Except for those three things. And oil too. Oil is going to do good. So actually it's four things. I shouldn't say three things. Gold, silver, oil, and cash. That's what's going to do good. But then, when the Federal Reserve comes out and they fix this thing, then it's going to reverse, and your cash is not going to do good. But your gold and silver is still going to do good, and oil is still going to do good. So if you get in the picture now, what's going to happen is it's all down to what the Federal Reserve's reaction is going to be to the deflationary event that's coming. Massive deflationary event. And this is the most likely scenario. It's not absolutely out of the question that we could avoid this deflationary event. But I think in order to avoid this deflationary event, the Fed's going to probably have to have something to do with that. They're going to probably have to back off selling their toxic balance book. And the stock market then would have to go up and up and up to infinity. Which, those two scenarios seem to me to be remote and unlikely. The most likely scenario is the Fed is not going to back off. The Fed is going to come out with more steam, and that the stock market's going to collapse. Now, what we've seen in the last, not yesterday, but the 2 days before that, when the stock market fell like 400 points, we've seen the stock market getting jitters over this 10-year Treasury bond at 2.73%. Actually, back then it was at 2.7%. We've seen them getting jittery over that. They're getting jitters over it. But by reacting to it, what they did was they immunized themselves from it just for a little bit. Because now that the stock markets went back up some, they're all saying, whew, and they're not worried about it so much. I see, an awful lot of markets is all about perception. So now that they had their little tantrum, and they sold a lot of stocks because they were worried about the interest, worried about the treasuries yields rising, because they were worried about that. They had their little tantrum. And now that the stock market's going back up again, and the downward trend is over, they're breathing a collective sigh of relief, and now they'll go back to what they were doing and raising the stock market up again. Now here's the thing. When this U.S. 10-year goes above 3%, then they'll ring the alarm bells again. But next time it'll be much larger, and the effect will be much greater. And by that time, the stock market's going to be probably up higher than it is now. You know, and so it'll have further to fall. At a certain point, if the stock market falls a certain point, it starts to create a self-perpetuating cycle of fear that makes it fall further. It's going to take a little bit to shake these investors. These investors are so used to buying dips. This is the problem. This is why it's going to take so much to shake them. And this is why they became immune. They see this raising interest rate. It caused alarm amongst them. They became immune to it, though, because they're so used to buying dips. It becomes a self-reinforcing habit. It's like the chicken. They used to have these little things. When I was a kid, they had them. They'd have a chicken inside a box, and they'd have a little piano inside the box. And she'd peck the keys, and if she pecked the keys the right way, a few grains would come down through the chute and feed her. And then she'd go over and eat the grains, and then she'd start pecking the keys again. It said, chicken plays a piano, sort of a thing. It was a reinforcing behavior. It's like Pavlov's dog. It's a type of psychological behavioral reinforcement. And this is exactly what's happening in the stock market. These guys are so used to buying the dips that they got nerved a little bit by the U.S. 10-year, rising up to 2.7. And so a lot of them sold. But as soon as they saw a dip, they're so used to buying a dip, it's just almost like a self-feeding. It's like Pavlov's dog. They're like Pavlov's dog. So they all bought, and then the price goes back up again. What will it take to break that cycle? Is a sudden shock in the market that creates enough fear and panic amongst them that you'll break that cycle of buying the dips. And then what will happen is there won't be any buyers, because this whole thing is just gonna turn into silly putty. The whole thing's gonna melt. The whole thing's like Frosty the Snowman. And so what we're looking at here is we could be looking at a major crash in the stock market because the whole thing is so oversold. And then what? Now there is a chance when it gets up around 3% on the U.S. 10-year that they might actually start buying a few blue chip stocks. You know, your classier stocks and stuff. Where the real the more what they consider to be the safer angle to this whole thing. But still, I tend to think that if we get a real crash, that the fear is going to take them out altogether. And we could see major drops. And when that fear hits, I'm going to tell you, because the cryptocurrencies are only a speculative investment, they're not a safe haven asset, you're going to see some big drops in cryptocurrency. This is going to create one heck of a great opportunity for the people who are right there, and they're on top of this thing, to get into these cryptos when the cryptos take a terrible beating. Now, I'm warning you here. When the stock market crashes and the cryptos take a beating, these cryptos are going to come back with a vengeance. And when this happens, Bitcoin might not survive to be the one on top from here on in. It might, Bitcoin might lose its crown, and there might be a new leader in the cryptocurrencies. If you can figure out which one's going to be that leader, then you could make out like a bandit, especially if they're been knocked down. And this knockdown, the cryptocurrencies could be so severe that it could rearrange the cryptocurrencies, rearrange the entire cryptocurrency space as to what coins are worth what. This could be so severe. And if you buy into the right coin at that time, when it goes back up again, when everything goes back up again in the cryptocurrency space, you will be a rich person. We're probably looking at a small time investment of maybe I mean, one silver coin. You sell one silver coin, you buy crypto with it. Like, what I'm saying is, if a guy were to play this whole thing the right way, a guy right now could take his wage from McDonald's. For how long would he have to work? 2 hours. A 2-hour wage from McDonald's. Turn it around and buy a silver coin with it right now. Then turn it around when the silver hits the high mark before the hyperinflation hits. Turn it around and then buy cryptocurrency with it at just exactly the right time. He could actually become a millionaire, or the equivalent of what a millionaire would be, from just 2 hours work at McDonald's, if he plays this thing exactly right. But can you imagine what you can make with this thing if you have this knowledge ahead of time of what's actually going to happen? And I think I'm pretty much on the mark of what I think is actually going to happen with this thing. And nobody else has given any of this information, the same information that I'm giving about this deflationary spike event and what's actually going to happen from this and how you can actually play this to your advantage. Because if you play this to your advantage, you're gonna make out like a bandit, especially on the cryptocurrency aspect of it. That's where the real big money is going to be made. But you got to hit the right cryptocurrency. You got to hit the cryptocurrency that's going to take up and it's going to roar up after this, after everything's been beat down. Now, Bitcoin will probably do okay, but there might be a coin that actually takes its place. Man, if you can hit it. If you can hit the right cryptocurrency, and you don't need to buy in very big either. Like maybe a $1,000 investment is all. But by that time, silver might be worth damn near $1,000 an ounce. I mean, silver's going to have its $10 days. I'm serious now. Okay, I might have exaggerated a little bit with $1,000 an ounce for silver. But when these problems hit, silver's going to have $10 days. Quite seriously. $5 and $10 days. And it's apt to do that for weeks. And you want to be in there on that, because you're going to see just as big a moves in silver and gold as you're seeing in the cryptocurrencies. But and when that time hits, you're going to see the cryptocurrencies going in the opposite direction. That's the time to use your silver, gold, cash, whatever you got. Best thing to use is your cash to buy your cryptocurrencies at that point. And when this whole thing turns, what you want to have is you want to have cryptocurrency, you want to have gold, and you want to have silver, and you want to have used most of your cash. Right now, the best thing for you to have right now is gold, silver, physical gold, physical silver. Forget about these exchange-traded funds and the paper gold and paper silver, SLV or GLD or whatever. Forget about all that. Buy your physical. But get your physical put away. Physical gold, physical silver, and cash, and put away $5 bills. I'll tell you why. When this deflationary event hits, you go hauling a $20 bill out of your pocket. First off, it's going to be overkill. Number two is somebody's apt to jump on top of you and choke you for it. for the $20 bill. Seriously. You want $5 bills. And, I mean, you can do anything you need to do with $5 bills. You can purchase gas, $20 worth of gas for your car. It's 4 5s. It's not that hard to carry 4 bills in your pocket. $5 bills will go a heck of a long way. Those are what you want. The 1s are a little bit too small. The 5s are just right. Put away a big nest egg of $5 bills for yourself. Put away physical gold and physical silver on this end. Now what you do, how you play this is when the thing hits and all of the ATM machines are closed, you can use your $5 bills to buy groceries with, and nobody else is going to be able to get any groceries. Nobody else is going to be able to get any gas. You'll be able to get gas and groceries with your $5 bills. And then when the thing reaches its culmination and you see the cryptocurrencies go down to rock bottom, use not all of your $5 bills, but use a good chunk of them to go out and buy cryptocurrency with. Right? And cryptocurrency will be at rock bottom, and you'll be able to buy one heck of a lot of cryptocurrencies with those $5 bills. So you get 200 $5 bills. You'll be able to buy a heck of a lot of cryptocurrency with that. And don't sell the whole way through. Don't sell any of your gold and your silver. Hang on to that for dear life. HODL, your gold and silver, your physical gold and silver. And get rid of most of your $5 bills you had stacked up for yourself. Save a few. Save probably 25% of them. Save just in case. So you'll be safe right through the whole event. And use quite a few of them to buy your cryptocurrency. Then when this whole thing turns, you'll have a nice fat nest egg full of cryptocurrency. You'll have a nice amount of gold and a nice amount of silver put away for yourself in physical form. The dollar will go down the poop hole, and you won't care. So those 5s you have left over will become worthless. The 5s that you didn't spend will become worthless. But they will have got you through the event. And you'll have the stuff that really counts. And you will be sitting pretty where all of your neighbors are going to be broken people. Because this whole thing is designed to destroy the middle class people. But you won't be destroyed. You'll have preserved your wealth through the worst critical event in human history, which is coming right around the corner. And why I say it's coming right around the corner is if you see how these bond prices are moving, then they're not going to stop. The Fed's going to actually, what's making these bond prices move is the Fed selling their toxic balance book, and they are not going to stop. They're not going to stop. They're going to increase it. They're going to double it. They're going to triple it. What they're doing. And so the speed that these bonds are moving at, the yields are rising at, is going to increase. It's not going to decrease. It's going to increase. And it's just a matter of time until it goes up so high that it busts the equity markets. Until it pops all the bubbles. Until it pops the real estate bubble. It pops the car bubble. It pops all these bubbles, and we go into a deflationary event from hell. And then you know that they cannot leave that deflationary event without fixing it. They have to fix it once it hits. It has to be fixed, or it'll destroy the people who are in charge of everything. The people who are in charge of the government, the people who are in charge of the Federal Reserve, everybody. It'll destroy them if they don't fix it. They have to fix it. And the only tool they have to fix it with is money creation. So the whole thing lays out a pattern. When I mention it to you and show it to you, you can actually see how that pattern is actually laid out. And it becomes a no-brainer that one thing is going to lead to another, and this whole thing, in the end, is going to lead to a hyperinflation. There's no place else for it to go. It has to follow this pattern. Anyway, I'm starting to sound preachy on this a little bit. But, I mean, this is coming so fast, that's why I'm doing extra shows on it. I'm doing extra shows on it because I can see it starting to break open. This can of worms is starting to break open right now. This is what everyone waited for years, and it didn't come, it didn't come, it didn't come. And now that it's here, none of them can see it. And they're not reporting on it. They reported on it for years. Now that it's finally here and ready to break out on everyone, nobody's saying nothing. All's quiet on the Western Front. It's the calm before the storm. And you got to play this thing right. You got to get in there and play it right. Or play it to the best of your ability that you can. If now that you've got the information, you know kind of what's going to happen. Play it to the best of your ability to play it. Good luck, everyone. Thank you for listening. Thank you for helping to keep my station alive. And listen, guys, I'm almost up to my 1,000 subscribers on my other channel. I'm only just a very few subscribers away. If you haven't subscribed there yet, it's a great little channel. I do a news report every morning. It's a 3-part news report on the latest stories going on in the world. It's an audio report, and it's called the Delta Report. And I'm going to put the link in the description. Head on over there and sub it and get me up to 1,000 subs, because YouTube's not going to pay me nothing if I don't get to 1,000. Now, I got until the 20th of this month. The 20th of February, before they cut me off and I don't get one bit of pay. And so I think I'm going to make it. I'm real close. But please go over there and sub, and please don't unsub it. Just sub it, and if you see a show you like, watch it. So on the channel, on the Delta Report, you see a Delta Report that takes your interest, watch it. Thank you for your support, guys, and we'll catch you in the next episode. Bye.